Hello, you're watching Business Day TV and I'm Kaka Ngofe. We're currently at the Credit Guarantee Insurance Conference where business leaders, industry experts and stakeholders join forces to discuss strategies for mitigating risk, facilitating trade and building business resilience in a challenging economic climate. The conference is bringing together different industry professionals. What message are you trying to drive when looking at the future of trade credit insurance and its importance in fostering resilience in this economy?
We title this conference Expanding Horizons. It's really to get the various sectors of our economy talking with each other in one room, firstly. Secondly is to say there is a connect between one and you from the top to the bottom. But expand your horizons and thinking about problem solve. The economy hasn't grown in the last many years. So seeing all of these cycles, and now it's about making sure that as we come off the cycle, we are trading and we are growing, but we're also expanding the economy because of, the three challenges of our economic system. Poverty, unemployment. So how do we want to participate in making, or at least participate in eliminating part of those challenges, is to expand the economy and get the liquidity back to the people that are, entrepreneurship, give them capacity to grow through instrument like credit insurance.
Charles, CGIC is owned by Old Mutual Insure and Atradius. How does this ownership structure influence when looking at CGIC and OMI's strategic decisions?
When that partnership between Old Mutual Insure and Atradius goes back to 2007. So it's fairly recent, but I think what you've got here is the power of a local market leader, CGIC, and you've got the power of an international player, strategic alliance with an international player with global reach. So, in days gone by, for example, if an exporter in South Africa wanted to send product to Italy, CGIC would have to do a lot of research on that company far away in Italy to try and get to a credit decision on that company. Now it's much easier just to contact Atradius in Italy and say, what do you think? They're in that market, they got a branch office there, and they got a very informed view, and so I think that works tremendously. And then on a reciprocal basis, Atradius clients based in Africa, they refer to us for an opinion, underwriting opinions as we call them, and because we operate on the ground in many, many African markets, we know our way around, we know many of these companies. In Africa specifically, it's not that simple to look up company information on the internet, So when you're in places like Europe and the traditional markets where Atradius operates, developed markets, it's much easier to source information on companies. But if you're operating in Kenya, now it becomes a little bit more tricky, or Malawi and so on. So you need to be on the ground. So Credit Guarantee is very much on the ground in those markets, and that's how we gather information which we use for our own underwriting and to share with Atradius. So I think the partnership has worked extremely well, and it's almost a template for how a local global partnership should work.
Well, I wanted to look at the role of the private sector and specifically looking at the credit insurance industry and how it plays out in advocating for and supporting better governance in both the public and private sector.
The private sector, they are the ones that get punished when diplomacy fail, actually. When diplomacy fail, when diplomatic relations, trade relations are not aligned very well, what do you see? You see South African companies packing their bags and coming. Why South African companies are doing so badly on the African continent? It's because not much work has been done in aligning institutions. The instrument exists maybe at superficial level, But how does a South African company, an insurer, survive in another jurisdiction? How do you align laws in a way that it could guarantee certainty? They could be able to deal with risk. They've got a sense as to predictability. And that is where the problem is. That's why South African companies are not doing so well. So when diplomacy, it's not been done well, when trade relations are not being concluded, built properly based on sound institutions, private companies are going to suffer. The symptoms of that problem is going to be seen in private companies not adapting so well. A case in point is how South Africa's private companies are doing on the continent. They're not doing so well. We need more engagement, more openness domestically, and we should understand that crafting what amounts or what constitutes South Africa's national interest is not something that should just be, let to the purview or maybe left to the domination of a few or elites and so forth. We need to talk about it. Other political parties need to be represented within this. We have a power sharing system in place that need to be reflected in the policy trajectory that we take. We have to start there. Let's wake up to the reality. It's a power sharing. There's no one who is in charge on their own. Therefore, policy should reflect that.
Your work has often emphasized on the concept of conscious capitalism, doing well by doing good. In high-stakes industry like credit insurance, how can companies balance profitability with the responsibility to society?
Look, in any company, what I would recommend that all organizations, they need to have what I call a purpose. Why do they exist? If they were not going to be around, what is it that people would miss? You need to have that at the core of you. You need to define that for yourself. And that can never be your purpose is to make money, or my purpose is to drive shareholder value. No, it has to be broader than that. It has to be, what is the impact that you as a company are having in terms of the society that you are living in? Yes, in the process of doing that, you are going to be making money, of course, but it needs to be much more bigger. So for me, conscious capitalism is this, always trying to find that intersection of doing good and doing a good business. One of the things that has come out recently is that one of the priorities, key priorities, is the ability of a company to manage risk broadly, And to me, when it comes to credit insurance, it's just one of the tools that needs to be deployed by a company as it's managing its risk for itself. And this is something that often we don't pay attention to. We insure this, we insure that, we insure assets, but we do not insure, when it comes to people that are owing us, and if we are unable to collect from them, then what? Right? And we need to pay attention to that. Of course, you do not have to be insuring everything. You need to analyze the profile of your customers and then say which ones are at higher risk and which are not. Then, depending on the results of that exercise, you do the necessary investment appropriately. And this can really, really be something that helps companies who most of the time, they would avoid, if they had done the right things, they would avoid getting themselves into business rescue.
Can we look at the key risks that exporters should be aware of and how your department is helping them navigate those risks?
So, as you know, we are a risk mitigant. We provide both political and commercial risk. Obviously, doing business on the continent is not an easy thing. Most of the countries that are highly indebted, you find them on the continent. And generally, doing trade on the continent is a big challenge. If you look at the infrastructure deficit that is there, which is estimated to be between 130 and $170 billion per annum, it does affect the continent's competitiveness. So I think from one side, we've come up with new products, to assist our exporters. Previously, we were not playing in the short-term insurance space, but we've now ventured into in order to assist our exporters. But we're not doing that in competition with the private sector, insurance companies. We want to collaborate with them so that we can deepen our underwriting capacity to assist our exports. And the other thing that we're looking at is can we discount our premium for relevant sectors, just to stimulate economic trade, especially the rail sector, some of the deals that can be executed under the Luxembourg Protocol. So those are the deals that can benefit. Because when you look at the protocol itself, it does take away a lot of legal risks that you can face in the different countries, but provided that the countries are also signatories.
And just lastly, let's look at what key takeaways you hope delegates will take away from this conference.
So I think there are many takeaways that delegates will take away. I mean, some of the topics are around, climate change. How is it impacting our export business? What are the measures that need to take to adjust, both in terms of pricing and mitigation, and also in terms of the financing instruments, green bonds. So I think there's a lot. Obviously, the world has changed. I always say that there's a difference when you look at risk. A perception, or is it a reality? So I think one needs to strike a balance between the reality and the perception. And especially when you come to doing business on the continent. Because what might seem to be a high-risk country, it could be an opportunity to trade. And I think, these are some of the things that people need to be aware of, not running away from doing business in high risk. And some of the things that are also quite challenging is how do we deal with the geopolitical issues that have an impact on the business. So obviously there's no straight answer to that. It depends on how you experience a jurisdiction, whether you're comfortable or not. Your sense of risk and the risk appetite will guide you in terms of whether can I go in or can I go out.
As the CGIC comes to an end, it highlighted the critical role that credit insurance plays in navigating a volatile economic landscape and building a more resilient business community. That's it for myself, Kak Angofe. Until next time, goodbye.